To understand the dollar's dominance, we must go back to the period after World War II. The United States emerged as the strongest economy, laying the foundation for the rise of the dollar. After the war, European countries were devastated, with their economies in ruins. In contrast, the US became the global economic leader, providing financial and industrial support to rebuild Europe. Programs like the Marshall Plan were instrumental in reconstructing European infrastructure and economies, further establishing the US as the global financial anchor. This economic strength made the dollar the preferred currency for global reserves, as its value was tied to gold, ensuring unmatched financial stability. The stability and trust in the dollar became the cornerstone of global finance during this transformative period. The dollar's dominance didn't happen overnight. During the Great Depression, the US government implemented policies to stabilize its economy, such as creating jobs and increasing public spending. The dollar became a symbol of financial resilience. By the time World War II ended, the US had accumulated the largest gold reserves in the world. At the Bretton Woods Conference in 1944, global leaders agreed to peg their currencies to the dollar, solidifying its role as the world's reserve currency. This marked a pivotal moment in financial history. The Bretton Woods system not only established the dollar's dominance, but also set up institutions like the International Monetary Fund, IMF, and the World Bank, which relied heavily on the dollar for their operations, further entrenching its global role. The Bretton Woods Agreement in 1944 established the dollar as the world's primary reserve currency. With the dollar backed by gold, other countries linked their currencies to it. This system provided global financial stability and fostered trust in the U.S. economy. International financial institutions, such as the International Monetary Fund, IMF, and the World Bank, also adopted the dollar for operations. Gradually, nations began conducting trade in dollars, cementing its dominance in global commerce. The dollar became the currency for settling international debts and facilitating cross-border trade, offering unparalleled convenience and security. The stability provided by the dollar-backed system encouraged global economic cooperation and growth. In the 1970s, the U.S. abandoned the gold standard, but the dollar's dominance continued to grow. This was largely due to the petrodollar system. The U.S. negotiated agreements with oil-producing nations, ensuring that oil would be traded exclusively in dollars. This created a continuous demand for the dollar, as countries needed it to purchase oil. This system not only strengthened the dollar's global role, but also provided the U.S. with significant economic leverage in international markets. The petrodollar agreements ensured that the dollar remained indispensable in global trade, especially in the energy sector. As oil prices fluctuated, the demand for dollars remained consistent, reinforcing its position as the world's currency of choice. Today, the US dollar dominates global financial markets. It accounts for over 59% of foreign currency reserves worldwide and is used in 85% of global trade transactions. Major corporations and central banks rely on the dollar for stability and liquidity. The dollar's widespread use in international trade, investments, and reserves makes it a cornerstone of the global financial system, enabling seamless economic interactions across nations. Financial instruments like bonds, derivatives, and commodities are often priced in dollars, ensuring its influence in every aspect of the global economy. This dominance gives the U.S. a unique position of power in shaping global financial policies. The dollar's global dominance provides unique advantages to the U.S. economy. It allows the U.S. government to finance deficits by printing dollars that are circulated worldwide. This global reliance on the dollar enables the U.S. to maintain high levels of spending and sustain its economic growth. The ability to issue debt in its own currency gives the U.S. unparalleled economic flexibility, ensuring its influence in global markets. Additionally, the dollar's dominance attracts foreign investments, further boosting the U.S. economy. The stability of the dollar acts as a magnet for investors seeking safe haven assets during times of economic uncertainty. In recent years, digital currencies have emerged as potential challengers to the dollar's dominance. Cryptocurrencies like Bitcoin and Ethereum offer decentralized financial systems, while nations like China are developing their own central bank digital currencies, CBDCs. These innovations could reshape global finance, potentially reducing the dollar's role. However, the dollar's established trust and widespread use remain formidable barriers to these challengers. While digital currencies present exciting possibilities, they face challenges like regulatory scrutiny, adoption hurdles, and scalability issues. The dollar's network effect and historical dominance provide it with a significant advantage over these emerging alternatives. The dollar's influence extends far beyond the U.S. borders. In developing nations, it is often used for trade and savings due to its stability. Many countries peg their currencies to the dollar to ensure economic stability. Additionally, the dollar facilitates international trade, providing a common ground for transactions in regions like Africa, Asia, and Latin America. Its role in stabilizing global economies cannot be overstated. The dollar acts as a lifeline for countries experiencing hyperinflation or economic instability, offering a reliable medium of exchange and store of value. Despite its strength, the dollar faces challenges from global economic fluctuations. Inflation, rising interest rates, and geopolitical tensions, such as trade wars, can impact its value. Conflicts between major powers like the US and China often lead to currency fluctuations, affecting global trade and investment. These dynamics underline the importance of economic policies in maintaining the dollar's stability. The interconnectedness of global economies means that any major shifts in the dollar's value can have ripple effects worldwide, influencing everything from commodity prices to foreign investments. The dollar's strength significantly affects other currencies. When the dollar appreciates, other currencies often weaken, increasing the cost of imports for those nations. This can lead to inflationary pressures and economic instability. To counter these effects, countries implement monetary policies to stabilize their currencies. Understanding the interplay between the dollar and other currencies is crucial for global economic resilience. The dollar's role as a benchmark currency means that its fluctuations are closely monitored by policymakers and financial institutions worldwide. As we look to the future, the dollar's position as the dominant global currency is not guaranteed. The rise of digital currencies, along with the growing economic influence of nations like China and India, presents potential challenges. Alternative financial systems and currencies could emerge, altering the global economic landscape. The dollar's adaptability and resilience will be tested in the coming decades. However, its historical track record and the trust it has built over time provide it with a strong foundation to navigate future challenges. The US dollar has been a cornerstone of the global economy for decades. Its role in trade, finance, and economic stability has shaped the modern world. However, as the global economy evolves, so too will the challenges it faces. Thank you for watching. If you found this video informative, don't forget to like, share, and subscribe for more insights into global economics.